Hello, and thank you for joining us for our successful loan modification and mortgage assistance workshop. Um, Today, we have a special guest. We have California Senator Tom Umberg and Ana Gonzalez from his office who will be joining us. And we're going to be talking about some really great information about how to save your home from foreclosure, loan modification programs, as well as mortgage assistance. This workshop is presented by HomeOwnership OC in partnership with Fair Housing Foundation and Senator Umberg's office. So my name's Connie Dertarosian. I'm with HomeOwnership OC. I am a HUD certified housing counselor, and I have over 20 years experience in the nonprofit world with homeownership, foreclosure prevention, credit, and I actually worked through the first financial crisis back in 2007, 2008. So we learned a lot of good information back then, and I can tell you things are a lot better now. So hopefully I'll be able to answer all your questions, and if not, we'll certainly get back to you. So today I want to introduce Ana Gonzalez. She's the district director with Senator Tom Umberg's office, and she's a great partner of ours. And let me introduce Ana, and she can tell you a little bit about herself.
Hi, everyone. Hi, thank you, Connie. I'm so happy to be here today. And hi, everybody. My name is Ana Gonzalez. I'm the district director for Senator Tom Umberg. And thank you all for joining us today. I have actually been a partner with HomeOwnership OC for a very long time, even in my past professional life, working with Connie for a little over 10 years. So you are definitely in good hands, and I'm really proud to partner once again with her on this very important issue. So we are here to assist you with any of your housing needs, obviously landlord tenant, any information that you might need. Please feel free to contact our office, and we'd be happy to assist in partnership, obviously, with Connie and HomeOwnership OC. And I'm sure Connie will share our information as well. So with that, I'm going to turn it back over to Connie, and we do have a special message from Senator Tom Umberg today as well.
Excellent. Thank you, Ana. So today we're going to be learning about forbearance plans, what they mean, what happens after your forbearance ends, how to successfully obtain a loan modification, and we're also going to be talking about mortgage assistance programs through that California Mortgage Relief Program and some fair housing protections as well. So as Ana mentioned, we do have a message. The Senator was kind enough to provide a message for us. So I'm going to go ahead and let that play. He recorded a message for us because he's a busy guy.
Hi, everybody. This is State Senator Tom Umberg, representing Orange County. Today, I'm proud to partner with HomeOwnership OC, a local nonprofit organization, on offering a free loan modification and mortgage assistance webinar. In 2007, HomeOwnership OC has been promoting and preserving the dream of homeownership in Orange County by counseling residents on financial improvement, housing opportunities, and this online workshop will focus on helping homeowners who are facing financial hardship due to COVID and unable to pay their mortgage. That's how to apply for Cal HFA's Mortgage Relief Program, successful loan modification, deferment, and other loan workout options. Thank you for being here today, and thank you to HomeOwnership OC for their important work.
All right. Well, thank you to the Senator and to Ana for joining us today. You know, we have a great partnership with them, and as Ana mentioned, we've been working with Ana for a long, long time. I feel like it's been more than 10 years. So she's actually been on our board, and she was a counselor at one time too. So she's a great resource as well, and we appreciate your partnership for sure.
Thank you. Thank you.
Oh, sure. No problem. So I think the Senator did a great job at introducing us. So HomeOwnership OC is a nonprofit HUD-approved housing counseling agency. We were started back in 2007, and we've been doing these educational workshops and helping over 17,000 people. We help with rental issues, credit, home buying, of course, foreclosure prevention, and avoiding real estate scams. And we do partner with other local nonprofits such as the Fair Housing Foundation and the Senator's Office to bring you these great educational workshops. You can find out more information at homeownershipoc.org. If you guys do have any questions throughout the workshop, feel free to send them in the chat box. I'm happy to answer those questions for you. If we can't get you an answer, I'll definitely get back to you and get you an answer. So as I mentioned, Fair Housing Foundation is one of our partners. They specialize in fair housing, landlord-tenant issues, and they're dedicated to eliminating discrimination in housing and promoting access to housing choice for everyone. So they're a great partner of ours, and they do focus more on the fair housing area. So if you do have questions about that or suspect discrimination, we can certainly put you in touch with those folks. They assist over 7,000 clients a year and are a really great partner of ours, specializing in, like I said, in those rental aspects as well. So a little bit about the help that is available. The good news is, as soon as COVID hit, help was immediately passed down to homeowners who are struggling to pay their mortgage. Initially, a lot of folks could apply for a forbearance plan, which is a pause in your mortgage, and for a period of time. So as soon as, you know, people weren't able to work, they could apply for a forbearance plan for 3, 6, 12, even up to 18 months. I haven't seen them go farther than 18 months. Most of the time it's about a year. And then after the forbearance ends, you'll have to figure out what kind of loan workout program is available to you. So, but the good thing is the lenders worked out those programs and were able to put people on forbearances for a period of time so they could get back on track. Now, those can extend to lines of credit, your second loans, your equity lines of credit and such as well. So you can also ask for a forbearance on those and loan workouts on those loans as well. There are lots of programs that are available. We're going to talk about them today. Most importantly, it's very important for you to keep in contact with your lender. So sign up for those online accounts so you can message them, apply for loan modifications, and do lots of stuff online. That's probably the best way to get them information and stay in communication with them. Just remember that while you're on a forbearance, it is not loan forgiveness. You are going to have to pay back that money, even though you haven't been making payments. You will have to pay that amount back, which is why you do need to apply for some kind of workout solution at the end of the forbearance period. So contact your lender, stay in contact with them. Of course, get help from a HUD-approved agency like HomeOwnership OC. If they have an app, you can sign up for an app on their phone. Most importantly, just keep in contact with them. All of their contact information should be on your mortgage statement, and you should work with a housing counselor for a most successful workout, because you may want a deferment, but if they may not offer you a deferment, they may offer you a loan modification, but maybe you don't like the terms of the modification or you don't understand it. A housing counselor is going to be able to explain those terms to you. Some of the questions you want to ask are, how am I going to be required to repay this after the forbearance plans? What options are available to me? Will my monthly payments be higher to catch up? Can you add the unpaid amount to my principal balance? A lot of times people thought it was automatically going to be added to the end of the loan, and it wasn't. So you will probably have to apply for a workout and see what kind of options are available. And we're going to talk about a few of them today. Also, be very careful. Look out for scammers who are not your lender or servicer or not a HUD-approved agency who are offering help, charging a fee. We've had lots of folks who have paid money. You don't have to pay money for a loan modification or to work with your lender, and never make payments to anybody other than your lender. We'll never tell you to do that, okay? Because we have had clients who have fallen victim to a scam, and it just makes it that much more harder. All right, so we want to know who owns our loan. So there are some loan lookup tools. So Fannie Mae and Freddie Mac are government-sponsored entities that can be the backup of your loan, so to speak. And you can look up and see if your loan is owned by Fannie, Freddie, or if you're not sure if it's a FHA, you can also call to find out if it's a FHA. So what does that mean if it is backed by Fannie, Freddie, or an FHA? It just means that it's a government entity backing up and insuring your loan. So there are some more workout options available. Now, if your loan is not one of those, that doesn't mean that you won't have options available. You will still have options available to you. They just won't be as specific guidelines as for the government-backed loans. So there are several types of loan modification, deferment, and mortgage assistance plans available. California has the Cal HFA Mortgage Relief Program that we will go over the details for that. And it's up and running. So as I said, federally backed mortgages like FHA and VA have special COVID loan modification workouts, partial claims, and flex mods and things like that that are available to you that they may not be available to somebody who just has a conventional loan. Don't worry, conventional loans still have lots of workout options. So a lot of times it depends on the information you're providing to your lender, and if you don't provide complete information or you don't have sufficient income, they're going to go ahead and deny you, which is why you want to use your counselor, have them review all of the information before you submit it to make sure that you're submitting a successful loan packet. You're going to want to start working on your loan workout option 30 days before the forbearance ends, because it may take up to 30 days for you to get qualified for that particular program. So there's a couple different options that are available. We're going to talk about repayment plans, forbearance plan, loan modification, streamlined refinance or modification, deferment, and reinstatement. So what's a repayment plan? Well, repayment plan is basically where you pay your payment and a little bit more to get caught up on the amount that you are behind. So repayment plan is not a loan modification, right? You would make your regular payment and a little bit more so that you get caught up on those few payments that you've missed. Usually works for people who are just a couple of months behind, no more than 6 months behind, because imagine adding 1 year of payments onto your payment. That would probably be financially, you'd be unable to make those payments. So a repayment plan is one option. Usually don't have to apply for, qualify for that. If you're able to make those payments, we'll go ahead and issue you a repayment plan. Forbearance we talked about, that's where you're pausing or suspending the payments for a period of time. It is something you will have to apply for, and you can ask for an extension of it. So if they give it to you for 60 days and you need a little bit longer, you can call and ask them to extend your forbearance. Usually it's 3, 6, 12 months, may go up to 18 months, but don't bank on it because majority of them end after a year. Then there's loan modification, where the loan's modified or restructured. There are special modifications or modified plans for families that are impacted by a federally declared disaster, which we are considered. COVID is a federally declared disaster. So they have special COVID plans. So you want to make sure you tell them, I've been impacted by COVID. Therefore, you can qualify for those types of modifications. There's a streamlined refinance or modification, where the lender rewrites the terms of the loan using a refinance or modification and streamlined process, meaning that you don't necessarily need to provide all of that documents, all of the documents necessary in a regular modification, where you're going to have to provide bank statements, income information, tax returns, all of that. Streamlined, maybe a little bit, they ask for less documentation. They just take the information over the phone and provide you with the streamlined refinance or modification. Deferment is where they place the amount that you're behind back into the principal balance. of your loan, or it could be in a balloon payment at the end of your loan. So that's why it's really important to know the terms of the loan modification when you're signing up for this stuff. Make sure you understand the terms of it, because a lot of people didn't understand that they may have a big balloon payment at the end of the payment period. There's also reinstatement. That's where you pay back the amount in full that you were behind on your mortgage. So that's also an option. Usually, not unless you happen to have lots of money laying around, are you able to get back on track by paying the full amount, but that is an option. So if you can pay your mortgage, make at least your taxes, insurance, escrow payments, because those can usually only get extended out for 18 months or so if you're behind on those. And so it's really important that even if you're not able to make your full mortgage payment, that you at least try to make your payments on your taxes and insurance and escrow payments, or catch up on those. Repair, make sure you have a savings plan. While you're on a forbearance plan, it should not affect your credit, should not be reported as a mortgage late. Here's a sample loan modification agreement. It will look something like this. We'll tell you when it's going to start, when it's going to end, what the total amount of your mortgage is, what your monthly payments are, and it's going to tell you whether or not you have a balloon payment at the end, what the interest rate is. So all of this information is going to be in the loan modification agreement, and it is like another mortgage document, right? So it's a lot of detailed information that you may need assistance of a housing counselor to understand the terms of it. Very important that you understand the terms of the modification, because once you agree to this, you're agreeing to pay this amount of money. So you want to make sure that it's affordable for you. Question we get a lot is, should I wait? I'm on unemployment. Should I wait until I get a job before I apply for a modification? Will I need to have regular steady income before I apply for a loan mod or a workout? The answer to the question, yes, absolutely. You do have to show that you have regular income, that you're going to be able to make those payments once the modification starts, right? When you start making those payments, they want to make sure that you're not going to fall behind again. So we do have to show them that you do have regular steady income. If you don't have it yet, you might need to stay on the forbearance plan until you're able to get back on track with your regular steady income. If you don't have it, you need to get it. Rent out rooms, get back on track, get a second job, extra income, whatever it needs. Because really where the counseling starts is we start with your budget and where are you in affordability as far as your mortgage payments, what caused you to get behind initially, and has that hardship ended so that we can get you back on track. So take advantage of the time during the forbearance plan to find new work, apply for help, reduce your debts, create an actionable workout plan with a counselor. That's the first place they're going to start. The CARES Act did provide some additional unemployment programs. Small Business Association also has SBA loans and grants to get you through difficult periods. So hopefully you'll be able to apply for those programs. Again, just remember, you're going to need to have regular steady income when you apply for the loan modification or workout programs. If you have no prospect of income, then you need to talk to your counselor to see what options are available, come up with some ideas of how you may increase your income. Like I said, if you need to rent out rooms, get a side gig, do Uber Eats or Lyft or something like that. If you have no prospect of income in the future, or you're not able to afford your mortgage payments at all, you may need to consider selling your property. Just know that selling your property is a much better option than letting it go to foreclosure sale or short sale, because they're going to take that. Excuse me. Got it tickling my throat. just know that they are going to take lots of thousands and thousands of dollars if you do go to foreclosure. So you certainly don't want to do that. Short sale is the sale of the property in which the servicer agrees to accept the proceeds of the sale, even though it's less than the amount owed. Right now, we're not seeing a whole lot of short sales or foreclosure sales. Just know if you are underwater, so to speak, it does have to be approved by the lender. You're going to have to provide documentation just like you would for a loan modification. You have to show that you have a hardship. You have to show your income, taxes, etc., just like a loan modification. But again, you don't want to let your house go to foreclosure sale, because you will be paying thousands and thousands of dollars in attorney fees, foreclosure fees, etc. So early communication is key to a successful workout. Notify your lender immediately. Keep in contact with them. Usually the initial forbearance plans, you require no documents. For the longer term workouts, you are going to have to apply for them. They'll ask for a hardship letter, documentation, bank statements, income information, etc. Make sure you provide them complete information. Put your loan number on all documents that you send, or use the portal. If you're having trouble with your lender, a lot of times, they're like, we keep going round and round. I didn't get the paperwork, and you feel they're not treating you fairly, you can file a complaint with the CFPB or the Department of Financial Protections and Innovations. Used to be called the DBO, but now DFPI, and we'll talk about that towards the end of the workshop. Again, consider listing your house for sale. Take your equity. Don't let them take it if you have no prospects of income. Don't let it go into foreclosure and lose all of that money. All right, question. Do I have to be denied a loan modification or workout before I can apply for the California mortgage relief? So the answer to the question is yes, you do have to be denied a loan modification or workout, or, and I just talked to them yesterday to clarify this, if you're provided with a loan workout that really is not affordable to you. We had a client who applied for a loan workout, and the payment was going to be $1,000 more than her regular payment, and she was going to have a $400,000 balloon at the end of it. So it really wasn't affordable for her. So she was able to apply for the Cal HFA Mortgage Relief Program. Most of the time, you do have to have a denial. If in that case, she said, well, I'm not signing it, and then they sent her a copy of the denial. Now she's applying for mortgage relief. So for the most part, you do have to be denied a loan modification. You can apply for up to $80,000 to help make up those back mortgage payments. And something new they've just added is they're offering up to $20,000 for past due property taxes. Now that is property taxes only, no past due HOAs, just property taxes, up to $20,000. So say for instance, you're $50,000 behind on your mortgage, $20,000 behind on your property taxes, you could apply for a total of $70,000 as long as it doesn't go over the $80,000 total. It is only for first mortgages and your primary property. You can't own any other properties. You must meet the income and loan limit guidelines, and they do have a quick little guide. If you can look it up, or you can contact us and we can help you with applying for that. You will need to provide some income information, utility bills, bank statements, etc. You must have a COVID-related hardship, and you must be at least 2 payments behind for mortgage help, 1 payment behind for property tax help. Must be denied a loan modification workout from your lender. Usually they want a copy of that letter. And what I say is, most likely you're going to be more successful if you work with a housing counselor, because we do this all the time. So we're not going to have you apply for this if you haven't already applied for a workout with your lender. We're going to want you to try that first. You can visit calmortgagerelief.org for more information. Again, they have a little tool there where you can put in your information and see if you qualify. There's income guidelines and loan limit guidelines as well. Again, more successful if you work with our housing counselor because we're going to guide you through that process. So some important things for you to remember is start early, ask for help, sign up for that online account, and make sure you stay in communication with them. If you can pay your mortgage, even if it's a reduced amount. Read all the documents, and if you don't understand, get help from a housing counselor that can help you through the process. Also, watch out for fair housing issues. We're going to cover a little bit about fair housing as well. And if you guys, I know we're going through the information quite quickly. If you do have any questions, feel free to send them to me in the chat or the question box, and I'll be happy to get back to you. All right, so fair housing issues, we are all protected by federal and state fair housing laws. Under the Federal Fair Housing Act, there are protected classes as a result of race, color, national origin, religion, sex, familial status, which means the presence of children under 18, and disability, which includes physical and mental impairment, which limits a major life activity. Under California laws, it's more expansive, so that includes all of the federal protections as well as sexual orientation, gender identity and expression, marital status, medical condition, ancestry, source of income, age, genetic information, and arbitrary discrimination. The Fair Housing Act and the state fair housing laws cover pretty much all types of housing: rental housing, purchasing, selling housing, insuring, appraising, lending, nursing homes. Pretty much all housing is covered under fair housing laws. And housing discrimination would be blocking someone's access to housing, treating one buyer or renter differently due to their protected class status, or denying someone the right to buy or rent a home even though they can afford it as a result of their protected classes. So what's prohibited? Refusing to sell, lend, rent, or lease housing, say that the housing is unavailable for when it really is available, or providing different terms, conditions, privileges, canceling a sale or loan or credit application or rental agreement due to their protected class, or making threats, intimidating, harassing, etc. Those would all be prohibited acts. In real estate sales, discrimination examples include lying or exaggerating sales terms, not telling buyers about all the listings that you have, or stalling to show property, running discriminatory ads. So essentially, if you feel like something's not right and you have questions about it, then what I would say is contact us, and it doesn't help. And it doesn't hurt to get more information and find out more about your rights. Realtors can't steer you to certain neighborhoods or tell you, oh, you'll be more comfortable in this neighborhood because it's for professional adults, meaning like, you know, there's no kids here, right? That's what that would imply to me, or in this Hispanic community or this Vietnamese community, etc. Same thing applies to mortgage when you're applying for a mortgage or when you're working with your lender. You can't scrutinize one loan application more closely than another due to their protected class status, or given an unreasonably low appraisal. There's a big article in the New York Times about this, and how and this property had pictures of African-American individuals, and they did an appraisal, and then the person thought it was unusually low. So then they took out all the pictures and had somebody come back, and then the appraisal value was higher. Definitely showing appraisal discrimination. So that definitely is illegal. And again, had that person not reported anything, you know, or asked for another appraisal, they wouldn't have known. So you can't impose different loan terms, conditions, or deny loans in certain areas, which is called redlining, or target borrowers or renters based on their protected class. Same thing applies for lending. Can't refuse to provide information about a loan, steer applicants to bad or loan products, or require them to have a co-signer, etc. One big case that was recently settled was in regards to pregnant women going on maternity leave and saying, oh, we can't give you a loan unless you go back to work. And actually somebody called me about this and said, hey, my lender, this is, I said, oh, that's a huge fair housing violation. You need to report them. So again, if you're applying for mortgage help, same thing would apply. There are also different types of lending discrimination. There's overt discrimination, which is openly discriminating, like, hey, we don't lend to single women, or we don't want, you wouldn't feel comfortable here. There's also disparate treatment where members of a protected class are treated differently than others, and it can be unintentional if they have a pricing discretion or something that results in white applicants receiving better pricing than Asian applicants or something like that. Redlining also can be a form of disparate treatment, and disparate impact can occur when otherwise neutral policy or practice has an unintended consequence of impacting a protected class of people, even if it was applied equally to everyone. So sometimes policies and procedures can coincidentally or inconsequentially discriminate against individuals. So again, if you do feel like there's any kind of discrimination going on in the lending process, or as you're negotiating with your lender, you can definitely find out more about your rights. The Equal Credit Opportunity Act is a federal law that makes credit discrimination illegal and holds the lenders responsible if they break the law, covers all of those protected classes we talked about earlier, and all are part of an applicant's income can be from public assistance. So if you're getting some kind of disability or other types of income, they can't discriminate against you in regards to that. Same thing, it applies to car loans, credit cards, home loans, student loans, business loans, personal loans. From the time the person applies for credit to when the account is closed, you're protected. It may also apply if a person is discouraged from applying for credit as well. Some examples of lending or credit discrimination is rejecting a credit application based on your consumer's protected characteristics, changing terms or conditions, asking if you receive alimony, child support, separate maintenance payments, asking if you're a widow or divorced, asking information about the consumer's spouse, like, oh, does we need to include your spouse's income? Again, refusing to consider public assistance income, or offering credit at a higher rate when they applied for something lower, even if they qualified at the lower rate, but then they're charging them a higher rate. As far as discrimination and foreclosures, the same thing as you're dealing with your lender. They can't refuse to provide the same forbearance terms or workout terms. They have to provide them equally to everyone. They can't provide less favorable loss mitigation terms or deny a forbearance to certain areas or certain people based on their protected classes, or fail to explain available foreclosure prevention policies to certain protected classes. This happens a lot with individuals who speak another language. They don't necessarily understand what they're citing, and they're providing everything in English. They also can't provide harsher collection or foreclosure practices because of the race or national origin of the borrower or the residents in those neighborhoods. Individuals with disabilities are protected, and that disability would be any physical or mental impairment that limits one or more major life activities. You do have the right to make a reasonable modification and accommodation in order to get full use and enjoyment of the property. The housing industry can't refuse to deal with you just because, or treat you differently just because your income includes sources other than wages like disability income. They do have to treat you the same way. An example is a disabled veteran was required to provide info verifying the permanency of her Social Security and VA disability benefits for the next 3 years, but that was not required for others who were refinancing their property. They can't ask for different type of income information. As far as COVID and fair housing, it is illegal to deny housing due to being from one of the countries affected by COVID, or have different rules for persons because they're from a country affected by COVID or perceived to be from there. It is illegal to refuse to sell, make a loan, offer credit, or rent because they're profiled based on their race, national origin to be associated with COVID. And COVID-affected individuals can be covered by disability protections under fair housing. If they are disabled due to COVID, taking care of someone with COVID also would be covered. All right, so let's see, we have a couple of questions. Let's see, so what is necessary to show a COVID hardship? So a COVID hardship would be, I'm on unemployment. You would show, you know, that you're now applied for unemployment or that your income has been reduced. So, you know, basically you just need to say, I've had a COVID hardship. What a majority of the people that we deal with have a reduction in income. So it could be your hours were reduced from 40 hours to 20 hours, and that would be shown on your pay stubs. And, you know, also if you had medical bills or something as a result of COVID, you could show that as well. Most of the time you just have to state what your COVID hardship is. Let's see. So another question is, can you go over the website where there's mortgage assistance? And yes, we are recording this session, so you can go back and watch it. It is going to be on our website, I would say, within the next 2 days or so, and it's on our events page. The California Mortgage Relief, I'm going to go back to that slide real quick, is at camortgagerelief.org. And you can apply. It's camortgagerelief.org is the website where you can apply. Like I said, they do have a brief little calculator there that shows you, ask you some questions to see if you would qualify for the program itself. One thing I will say though is that you should definitely try to work something out with your lender prior to. If you have been working with them and they keep giving you denials, then I say go ahead and apply for the mortgage relief. And I think, you know, they are changing the guidelines quite often. So, and opening it up to more folks. So that's actually a good thing. Like for, you know, originally they weren't paying property taxes, but now they're offering property taxes. They've also increased the area median income to, I think, 150%. It was at 100%. So, you know, definitely check back. That's one of the things when you're working with a counselor, we do get updates as to what the updates are for the program. Now, if you're having problems with your lender and they're not, you know, you've been applying, they haven't been answering, there's 2 places where you can report them. One is the Consumer Financial Protection Bureau. The other is the California State Agency, the Department of Financial Protection and Innovation, DFPI. So we work with Jackie, who's our outreach specialist. The DFPI is a California licensing and regulatory agency with oversight of state financial institutions, products, and professionals. Most of the big banks are under the CFP, Consumer Financial Protection Bureau, CFPB. But I also like to, you know, especially for credit unions and things like that, have people apply to the DFPI because they do have some pull in that area. They do audits to ensure state and federal compliance. And if they're not the person, they're going to tell you where to go. They will pursue legal actions against those operating illegally or unlawfully or with deceptive or abusive practices. So we've reported a couple of agencies over there too. And they do provide some consumer awareness presentations throughout California. They have a lot of great information, so use them as a resource. They have lots of information about senior scams. We've worked with them, escrow scams. I've been telling them about these new loan companies that are coming out with these crazy loan programs that say, hey, you can tap into your equity and you don't have to actually qualify for the loan. So people will go ahead and do that. And then, so for instance, this lady had $500,000 in equity in her property. She got a loan for $150,000, couldn't afford it, so she was going to have to sell her property. Well, when she paid them back, it was going to be $150,000 plus another $150,000, $300,000, and it was all in a contract she signed. There's all kinds of crazy stuff out there. Before you sign something like that, make sure you have a counselor review it, because we would have told her, it says right there, they're going to charge you fees. Modification and foreclosure scams are still out there, so be on the lookout for that. If it sounds too good to be true, it probably is. If you've been denied your lender from your lender, nobody's going to make them change their mind. Okay, we can usually, like I said, it's probably because of the information that you're providing. So we're going to look at your income information and your expenses and make sure that you have a balanced budget and income coming in before you apply for a modification. You don't need to pay for mortgage modification or foreclosure help, and you can definitely report the scammers that are out there. There's a lot of folks that are out there that are falling victim to this. So again, they have a lot of great resources at the Housing is Key website. The DFPI has a lot of great resources on what to do and how to avoid scams and such. Those home improvement PACE financing programs, we've been seeing some clients come out of the woodwork with that and having problems with that. Contractors who say they're going to do the work and don't do the work and put a lien on your property, and then, you got a lien on your property. So PACE is Property Assessed Clean Energy Program to provide homeowners help with financing energy efficient and water savings improvement. Do your homework before you sign the contract. Be sure you check the license of both the contractor and the lender, because again, we've had folks who have a $100,000 lien on their property and solar panels that don't work, and the work is not done. So it's definitely worth your homework to do your research on those individuals. You can file a complaint with the DFPI just like you can with the CFPB. Just go to their website, file a complaint. Usually they want you to try to work things out with the individual that you had a problem with first, and then file a complaint. You can call them, and they're a really great resource. Follow them on social media, subscribe to their communications if you want to keep in touch with them. But they're also a really great partner of ours. So what to do? Apply for help early as soon as you know you're going to have a problem. Work on getting some income going so that you can get back on track. Create a spending plan, stick to it, avoid scams and fake mortgage help. Set yourself up for success by working with our HUD housing counselors. If you're having problems, file a complaint with the DFPI or the Consumer Financial Protection Bureau. Just Google CFPB complaint, file a complaint, and you can do an online complaint. If you need help, you can complete our online intake form. It's on our website at homeownershipoc.org. Pops up right first thing when you get there. Complete the intake form and contact us. And as soon as we get it, we'll set up a phone counseling appointment for you. and we'll answer your questions. So let's see if we have a couple more questions. Let's see. What programs are out there to help with first-time buyers, like down payment assistance? So coincidentally, we do offer that as well. We offer a first-time homebuyer education class. It's on our website on the events page. You can take the class, complete the intake form. Once we get it, we'll get you your certificate. That certificate makes you eligible for down payment assistance programs. I think here in Orange County, we have up to $120,000 from the city of Santa Ana. We have lots of programs out there. Lenders have programs, and we go over all of that information in our workshop. It's, again, on demand, so you can watch it at your convenience, and it is about 2.5 hours or so. We do take a break in there, but it has all of the information you need to buy a home. We also, as I said, are recording this workshop. There is a workshop already on there, but this has the latest and greatest, most up-to-date information. So this will be up there, I would say, by Friday. So if you do need to review it, you can come back and take a look at it. What other questions do you guys have? I'm happy to answer questions as you apply for assistance. If you have any other questions, feel free to let me know. We are here as a resource for you, and it's super simple to get in contact with us. You can give us a call at 714-204-2314. Email me directly at cdt@conniedt.com, or visit our website at homeownershipoc.org. And we're happy to be of assistance. Like I said, we help with credit, rental problems, home buying, and of course, foreclosure prevention, loan modification, applying for mortgage assistance as well. So if you do have any questions or you think of anything at the, feel free to reach out to us. We are a resource. Like I said, we are a HUD-approved housing counseling agency here to help you through the process to make sure you have the most up-to-date information. All right, so it looks like we don't have any additional questions. And I do have this information in Spanish and Vietnamese as well on our website. We just did those workshops. So if you have language needs, we do have that as well. If you do have a question, feel free to send it to me in the chat or in the question box, and I'll be happy to answer it for you. You all are muted, so that's why you have to actually type it in the chat box. Again, our website is homeownershipoc.org. If you have questions, again, about fair housing, we can refer you over to the Fair Housing Foundation as well. All right, so it looks like we've wrapped it up. We have all of our questions answered. I want to thank Anna and Senator Tom Umberg for joining us today. They were great partners of us, and I really appreciate their partnership with us and their support of our organization. And again, if you guys do have any additional questions, feel free to reach out to us. You have our contact information. If you'd like to sign up for one-on-one counseling, go to our website, homeownershipoc.org, complete the online intake form. And if you are coming to us for mortgage assistance, you also need to complete the third-party authorization form so that we can speak to your lender during the counseling process. And we're happy to assist you through this process, all completely at no charge. All right, have a great day, and I appreciate everyone for joining us today.